the Trump administration is very much aligned with seeing the success of the American worker. So a number of the policies that are being effectuated really are about the average American family feeling that life is better and working better for them. This backdrop is fueling much of the enthusiasm that we see in markets in the United States. And then, of course, we're on a program of both fiscal and monetary stimulus that you would expect to see in the middle of a recession. We're seeing right here, right now, in a period of near full employment several years into the business cycle. So we're definitely on a bit of a sugar high in the U.S. economy right now.
So broadly, have markets moved away from the tariff issues?
The tariff issue is pretty much in the rearview mirror right now from the perspective of the market day in, day out. Now, the issues that relate to tariffs, in particular high inflation, are yet to be resolved. There's a sense of almost inevitability that the inflation genie is going to go back in the bottle. But I think that's a very premature conclusion. If you look at both the immigration policies, the fiscal policies, and monetary policies, it's a very pro-inflationary environment. And I think the markets are just way too calm about the prospects of a substantial move higher in inflation.
Is the Fed right to focus on the jobs, the labor market, instead of inflation?
So I think that is a really interesting debate. And I remember when Janet Yellen became the chair of the Fed, she had a very simple framework that she thought about. She thought about the fact that the U.S. had gone through one significant recession and the risk of another recession and the ensuing job loss and human capital atrophy that would go with a second adjacent or nearby recession would be incredibly damaging for millions of Americans. You lose your job twice in just a few years, you really do become separated from the broader employment market. And that was the lens through which she made a number of decisions to be in both at the time and in retrospect reasonably dovish in terms of managing interest rate policy. Right here, right now, I think that argument is a bit hard to reach. And the Fed's trying to make a decision between buying some downside protection on the labor market and managing inflation. And I think they're making a decision that puts them at risk if we do see inflation reaccelerate early into 2026.